Bloomberg Audio Studios. Podcasts, radio, news. This is the business of sports.
The business of sports can be intimidating or hard for a startup to break into.
We really appreciate when our owners are actually there, with us through the journey.
Teams, ours especially, have been very intentional to diversify at all levels of the company.
I think we're in the golden years for the NFL and college football.
Our demographic reach has continued to expand.
This is going to be really unlocking the streaming platform for sports fans.
Sports valuations are rising. We'll see when they peak.
You don't have to be the best in your sport to make a whole ton of money.
Bloomberg Business of Sports from Bloomberg Radio.
This is the Bloomberg Business of Sports, where we explore the big money issues in the world of sports. I'm Michael Barr, along with my colleagues Damian, Sassower, and Vanessa Perdomo. Scarlet will join us later on in the show. Coming up, we'll talk with the founder and CEO of Gambling.com Group, Charles Gillespie, about the growth of the sports gaming industry.
All that pent-up demand, people that have been waiting to register accounts go out and set up their accounts, and then it quiets down a bit. But then you're going to have, 15, 20, 30 years of fairly reliable growth.
We'll also talk about the big money going into getting and keeping top Argentine soccer talent in Argentina and what President Javier Milei has to do with it. All that and more is on the way on the Bloomberg Business of Sports. But first, we got a couple of big moves in sports media, and we want to go over all of that, including ESPN officially moving on from baseball. Joining us now to talk about it is Bloomberg News Media and Entertainment reporter Hannah Miller. Hannah, welcome to the Bloomberg Business of Sports.
Thank you for having me.
Well. We're back to that old fight with the regional sports networks and then ESPN and all this stuff. So I'm going to start with ESPN first. ESPN, now the way I'm going to word this is going to sound weird. They're dropping Major League Baseball, but Major League Baseball says, oh, no, we're dropping you. So can you explain what happened?
Yeah, so MLB is trying to make this seem very mutual, that they came to this decision together, but we know that there's more tension than that. MLB has been really trying to expand with its media rights. It's struck multiple deals, including with Roku and Apple, and these deals are a lot cheaper than what ESPN was paying. I mean, the deal with ESPN was $550 million per year. And they wanted a better price than that. So, they've kind of gone tit for tat. MLB has complained about, ESPN not covering baseball enough, not giving them enough airtime. ESPN has countered with, this is too high of a price to pay. And they basically, that this deal ended early. There was an early opt-out for the, after the 2025 season. The deal actually expired in 2028. So this is pretty surprising, but the door is still open. ESPN and MLB could come together, come to some sort of agreement. So we'll see if that happens.
Yeah, it's interesting for me, that the back and forth is so interesting. Why did ESPN ultimately feel like that they were paying too much?
Yeah, so I think ESPN was really looking at these other platforms. They were looking at Roku, they were looking at Apple, both of whom are trying to get more and more into sports streaming. And, ESPN was like, hey, we want a better deal. We want to be more in line with what these other guys are paying. So it's been very interesting to see in the context of other, sports media rights. The NBA deal over the summer was a knockout, record value. I think there is a real question of whether MLB will be the only major sports league to see a decline in price for media rights. But, even though ratings have been good for them, I don't think they've necessarily had the degree of success that they were hoping for. In the NBA, it's just a lot of star power. It's a game that people describe as more fun to watch. So these are going to be problems that follow MLB going forward.
Well, Hannah, let's crystallize it for our audience, shall we? I mean, the deal, as I understand it, was a 7-year deal that ESPN agreed to pay the league $550 million a year, 30 regular season games, including the wild card playoff round, and I think the home run derby. But, I think, I mean, for me, I mean, I watch baseball. I mean, I never have to watch on an ESPN because it's on Fox, it's on Turner, it's on Apple, it's on Peacock. I mean, is that the reason? Did Major League Baseball kind of sell themselves short? Did they thin the rankings, so to speak, by offering on so many different platforms?
Yeah, I think that definitely played a part into it. MLB has been known for sharing the love. You can access games on Fox, on Turner. There are a lot of ways to watch it. You also, still have some strong regional networks. I think that definitely kind of diluted things a bit, just spreading them around to different places.
Well, here's what I'm confused about, because in the contract, ESPN was going to air 30 regular season games, the $500 million contract. Then, of course, the wild card playoffs, the home run derby, 10 spring training games. But they're saying MLB that they did not get enough baseball coverage. Are they talking about the regular, when you watch daily ESPN reports, that's what they're upset about?
I think that's a huge part of it. It's just, not getting it focused enough in a lot of ESPN sports shows and their news coverage. Even the spring training games, it's actually up to 10 games that they could have aired. So they didn't even have to fill all of that with showing games. So, it's definitely, I think, makes sense in the context of this battle. Like neither side was satisfied with what was happening.
Wow. I want to see the home run derby. Now, where am I going to see it?
Well, that's the question. There's going to, there are rights up for grabs here. And like I said, they could come back together, patch things up, have an agreement where they could get those games back.
Hannah, you think that when they do get their agreement, that you think it's going to be a lower value than they would think?
I think it would. I think that's definitely a strong possibility. I was talking about that with someone the other day, where it's just like, we've seen just knockouts for other leagues. We talked about the NBA before, but yeah, there is a question here that MLB could be the outlier.
Hannah, I have to ask you, it's just to switch gears here. I mean, this whole restructuring of Diamond Sports Group, I think it's now called Main Street Sports Group, right? And we all know what happened. They filed for bankruptcy in 2023. Then they won approval of an Amazon-aided restructuring, and now Main Street Sports Group is going to be offering 16 regional sports networks for $20 a month in addition to its streaming service. I mean, how did this happen? How did this company turn it around so quickly?
Yeah, they needed a lot of help to turn it around. So all of this is part.
I guess Amazon helps.
Yes, yeah. This is all part of their bankruptcy restructuring. This is how they were emerging from bankruptcy. So both Amazon and FanDuel stepped in as white knights here. So Amazon struck a multi-year streaming agreement with Diamond. Diamond has undergone this rebrand to be Main Street Sports Group. They want to leave Diamond in the past, have a new future. And then the other player here is FanDuel. So these regional sports packages, it's going to be marketed under FanDuel Sports Network. And this naming rights agreement that FanDuel paid for this branding, that helped Diamond/Main Street get out of bankruptcy. So none of this is a huge surprise. Like, we've been waiting for this to happen and get finalized. But yeah, I mean, this is how they were able to get out of the hole.
Well, wait a minute. Piggy loves going in the sports draft here. So I want to make sure I got this right. Amazon, they're going to offer 16 regional sports networks. Any one of the 16 I can watch. Because I live in the Poconos in Pennsylvania, and I could get Miami if I wanted to and watch that. All 16 are open.
My understanding is it is based off zip code. So you will get the regional sports network that's for your area. So I actually was looking at the website today, and they were like, this is not available in your area. Like, get out, New York. It's not for New York. So that's my understanding, at least.
Oh, man.
And it's interesting when you were thinking about that and thinking about local blackouts and stuff. So one of the things that happened when Diamond Sports filed for bankruptcy was the MLB, reports came out that they were it was almost in their favor for regional sports networks to go away because they wanted to retain the rights to all of their media rights so that they could go to national partners, and that would maximize revenue and stop local blackouts. So how does this all play into that, this new Amazon deal with Main Street? And then when you look at popular regional sports networks, like you said, like with ES.
Yeah, I mean, so Amazon has been making this push into regional sports streaming and just sports streaming more broadly. Like, this isn't totally shocking. And, this struggle for regional sports network, it's a tale of as old as time. People are switching to streaming. They're trimming expensive cable packages. I think they're hoping that this is going to make everything more accessible to people, that they will get more coverage. We've even seen, you brought up, yes, like there are going to be Yankees games streaming on Amazon. We just heard about that. And it's something that, it's going to help these regional sports networks. Like, this is not easy for them. Like, MLB has also been doing deals with various teams to kind of develop their own regional brand. But yeah, I think with looking ahead, we're just going to see more and more stuff switch from cable to streaming. This is across the board, not just in sports. People want to pay less money per month. They want slimmer packages, and they want more customization. So all of this contributes
less money
to that.
per month, but it's $20 a month on a streaming service extra than what you pay for it already, which is crazy.
Yeah, no, I think they're kind of going for cord cutters here. Like, yeah, you're paying $20 a month for your streaming package, but like maybe you're not doing that expensive sports cable package that is, hundreds of dollars a month. Like, maybe you're getting rid of that to kind of get the sports you want specifically for your area. It's a toss-up. I don't know. I think like these slim sports packages, that's going to be a trend we're going to continue to see in 2025.
Vanessa, it's the Arizona Diamondbacks we're talking about here. Shame on you. But no, seriously, Hannah, my last question is this. I know that Main Street used Chapter 11 protection to end broadcast deals with a few teams, the Diamondbacks being one of them. I think the Padres and the Rangers were a few others. Who do they have agreements left with? I think they had a deal with the Braves, maybe the Angels. Do we know who those 16 teams are? And I think what Michael Barr really wants to know is, are the Tigers one of them?
Yeah. Yes, the Tigers are one of them. Detroit, LA, Miami, like they have some big cities that are in the mix here. So there are good offerings. Like, it's not, there are some really high profile teams included here. So yeah, it's a whole mix, but definitely LA and Miami are standouts.
Hannah Miller, thank you so much for coming in and talking baseball with us and regional sports networks and all the hootenanny on the Bloomberg Business of Sports. Thank you again.
Thank you for having me.
Our thanks to Hannah Miller for joining us. She covers media and entertainment for Bloomberg News. Up next, we turn to soccer in Argentina and the big money going into bringing top talent there. For my colleagues Damian Sassower and Vanessa Perdomo, I'm Michael Barr. You're listening to the Bloomberg Business of Sports from Bloomberg Radio around the world.
This is Bloomberg Business of Sports from Bloomberg Radio.
This is the Bloomberg Business of Sports, where we explore the big money issues in the world of sports. I'm Michael Barr, along with Damian Sassower and Vanessa Perdomo. Argentinian soccer clubs are doling out big-time contracts to players lately, driving a revival in the teams and in homegrown talent. And Bloomberg is reporting that Argentina's president, Javier Milei's economy has a lot to do with it. Joining us now to dive into the revival of big money soccer in Argentina is Bloomberg Buenos Aires Bureau Chief Patrick Gillespie. Patrick, welcome to the Bloomberg Business of Sports.
Thank you for having me.
Argentine are getting back into soccer now because before they really couldn't afford it. But all of a sudden now they're signing $1 million contracts to revive soccer in the country. And it's all thanks to the shoring up of the pesos. Can you describe what's going on?
Yes. President Javier Milei, his overhaul of Argentina's economy has had an unexpected outcome. Soccer players are returning home to a soccer, or should I say football, crazy nation. For decades, when the likes of Leo Messi or Diego Maradona grew up in Argentina, it was just understood that players were going to go to Europe. First, the best teams are there in Europe, but also Argentina's repeated economic crises made it impossible for the top clubs in Argentina to recruit and retain great players. And now that's starting to change little by little, thanks mostly to Javier Milei's economic policies. He factors in because Milei controls the exchange rate between the peso and the dollar, and the currency is getting much stronger on Milei's watch. For example, prices in pesos in Argentina went up over 100% last year, but the currency only, I know we wouldn't say this very jokingly, but only fell 22% last year. And so that mismatch between how much prices are going up and how much the currency is going down is making the currency, the peso, a lot stronger. And that's helping football teams sign players to these multi-million-dollar contracts.
It's such an interesting, thing that's happened here. It's a very unique Bloomberg business of sports stories, the way that the dollar and the peso have then affected the sports and the soccer system there. Can you give us a little bit more on that and how, the owners of these clubs are dealing with that, how they've been able to recruit these players back, and how it's, really raised, maybe has it raised, the overall fever of football again, or how has it raised, the level of play?
There's about 24 soccer players in Argentina making $1 million or more this year. And that's up from just a handful a couple of years ago. To give a little bit more size and scope, Argentine clubs have spent about $200 million in what's called the transfer market, where players shift from, say, one league to the other. And that's up from less than half of that amount, less than $100 million just a couple of years ago. So really, you've seen an exponential increase in how much teams are spending on players. And also, I think another key difference is that these players are not, say, sunsetting. They're not exactly at the end of their careers. One example is Sebastian Drusi, who is just 29 years old. He signed a $10 million contract with one of Argentina's biggest clubs, River Plate. Another example is Gonzalo Montiel, who scored a very important goal during Argentina's World Cup victory a couple of years ago. He returned as well on a multi-million-dollar contract. So not only is Argentina getting more players from abroad right now on these big contracts, but they're getting high-quality talent that's not players at the end of their careers, but still in their prime.
Patrick, you mentioned Driussi, and, I look at the contract he signed, and yeah, okay, he was getting paid 10.4 billion pesos when he signed it. Well, guess what? Now, due to the depreciation of the peso, it's 10.6 billion, right? So the movement, the FX vol, and our audience knows that I run emerging market fixed income here at Bloomberg. So the blue chip swap rate is nothing new to me, my friend. And, my question is this: $1 million a year is peanuts when you see what McAllister, Martinez, and Dybala and some of these other Argentine players are getting paid from, AS Roma, Liverpool. I mean, I think McAllister is getting paid 7.8 million US a year. So this is just scratching the surface. And I guess my question for you, sir, is does Javier Milei really have the clout to pull some of the top players, the top Argentine players in the world back home?
In the near term, I think the answer is no, because first, unfortunately, it seems like Leo Messi is probably going to finish his career at Inter Miami. But
no one's going to pull Leo out of Miami. I agree with you there, Patrick.
I don't think Leo Messi is coming home to play for a pro team in Argentina. Another big factor that Milei could change is that Milei is trying to change the structure of these clubs in Argentina into more private enterprise. Right now, a lot of the clubs, their leadership is elected by the fan base. And so that limits the amount of, say, foreign private investment that can go into these clubs and juice up contracts. So we've seen in Brazil, there was a reform in their soccer leagues to make it easier for teams to have foreign investors. And that's helped to attract, retain, and recruit higher quality talent. So I don't know if the World Cup starting roster is going to come back to Buenos Aires anytime soon, but certainly the stronger peso is going to help attract more players in the near term after really decades of the talent just immediately leaving. Either Messi left Argentina when he was 12 years old. Many of these players leave when they're 21, 22 years old. So the fact that some are coming still relatively in their prime is welcome news, but you're right. This is a very early trend. It's very incipient. And there's a lot of questions about whether Milei can sustain his economic policies, particularly the currency FX policies that are really a big part of Argentina's negotiation with the International Monetary Fund right now.
Pat, I mean, Boca Juniors is going to be playing in the FIFA Club World Cup this year. So signing, a few of the big players like Alan Velasco, who is playing in the MLS and now he's playing for Boca Juniors. Do you think these new signings are going to help them on that world stage?
Yes, these players, especially, I think when you, I know we mentioned Boca Juniors, but I think River Plate stands to benefit the most just because of these two players in their prime joining an already pretty strong club. So I think you are going to see the Argentine professional clubs compete at a higher level at the international stage, which is where they were about 2 decades ago. There were friendlies between Boca Juniors and some of the Spanish clubs where Boca either won or pulled a draw, which at the time was unheard of. It just you could never conceive of that. So it would be really, I think, special for Argentine clubs that are considered, going to an Argentine football game is an incredible experience. And to see that happen on an international stage like the FIFA Club Cup, it would be really, really special. But I can confirm, and I know people like Damian can confirm, that going to a Boca Juniors game or a River Plate game is one of the most phenomenal sports experiences any fan could ever have. And I'm not talking about a championship. I mean, you can go to a regular season game and it's nearly a religious experience. It's really incredible, the passion the fans bring every night.
Patrick, I have to ask this. I mean, we have you on the phone here. You're dialing in from Buenos Aires. And, what is sentiment like on the ground in Argentina right now? I mean, it's got to be positive. I mean, through all the austerity measures that Milei has passed through in the last year, he's still, it seems that the populace is still very, very pleased with him, that they're still very much on his side and in support of him. Talk to us a little bit about, what you're seeing on the ground.
Yeah, Milei is still enjoying a relatively high level of approval rating, especially when you think about the measures you outlined, a historic austerity campaign that saw the cost of living increase significantly in Argentina. Milei still has approval ratings around 47%. Those have stayed stable for several months at this point. And he only stands to benefit in the upcoming months as the economy is expected to continue recovering from a pretty brutal recession. But the government published economic activity data that showed 5% annual growth in December. That's one of the highest figures in years. So Milei has a stable exchange rate, lowering inflation, and an economy that's recovering with pretty stable unemployment at the moment. The wind is at his back for the economy. Milei is benefiting, but he's dealing with some issues on the sidelines that investors would like him to, stop speaking about. But if Milei can focus on the IMF program and economic recovery and unwinding some of the currency controls and other restrictions that he inherited from the previous government, he could be looking at a big victory when Argentina gets to midterm elections in October, and that would help him advance his pro-market agenda even more.
I know we're running out of time, Patrick, but I want to try to kind of put a bow on it about Milei. Before he had taken over with his economic policies, obscure markets, we're talking like Paraguay and Bolivia, because we all know that they're like super soccer markets. They were luring the Argentine players away before Milei came in.
Absolutely. We had inflation reach nearly 300% last year as Milei was trying to implement some of the necessary cold medicine Argentina needed because his predecessors were simply spending too much money and printing too much money. And that resulted in sort of a carving out of the soccer talent in Argentina, where some players felt forced to go to much smaller markets because they have more stable currencies. It really is unimaginable, the change from just a couple of years ago when players were going anywhere they could because they can't get paid in dollars here. They have to be paid in pesos. The currency was losing. It was, has lost since I've arrived in 2018. The peso has lost 95% of its value. We've had many of the bills, the cash bills that I first used to have when you got to the ATM here, they no longer exist because the government stopped printing them. They're worth nearly nothing. So the impact that Milei is having on the soccer league is really a reflection of his ability to stabilize the economy. But there's a lot of questions about whether his policies are sustainable in the near term or after this year, because Argentina has midterm elections. But also he still has a whole lot of homework to do on the economy when it comes to shoring up the central bank, making sure they have the stability to keep the peso on a more stable path. So there's a lot of questions about his economic policies, but for now, he's benefiting from a lot of social support. People like this economic program. They feel like the worst is behind them in terms of the recession and the biggest of the austerity measures. And it looks like Milei could be heading towards a big victory when we get to those midterms later this year.
Buenos Aires Bureau Chief Patrick Gillespie, thank you so much for joining us on the Bloomberg Business of Sports. We really do appreciate it.
Thank you so much.
Our thanks to Bloomberg Buenos Aires Bureau Chief Patrick Gillespie for joining us. Up next, Scarlet joins the conversation as we talk sports gambling and bring in the founder and CEO of Gambling.com Group. For Damian Sassower and Vanessa Perdomo, I'm Michael Barr. You're listening to the Bloomberg Business of Sports from Bloomberg Radio around the world.
This is Bloomberg Business of Sports from Bloomberg Radio.
Thanks for joining us on the Bloomberg Business of Sports, where we explore the big money issues in the world of sports. I'm Michael Barr, along with Scarlet and Damian Sassower. Gambling.com Group, trading under the ticket symbol GAMB, is a leading sports gambling affiliate, working as a liaison between the growing sports gambling public and the popular sports books and regulated online casinos. Gambling.com Group's founder and CEO Charles Gillespie joins us now to talk about the platform and about the sports gaming landscape. Charles, welcome to the Bloomberg Business of Sports.
Great to be here, guys. How can I help?
Well, you're talking to a degenerate gambler here, but I love online gambling. I don't get carried away with it, and I think, and I'm going to start right from the beginning. That's the key to the whole thing, because we've got a lot to talk about, but that's the key to the whole thing. Nothing wrong if you want to go and gamble your $5, $10 and put it on the Detroit Tigers. You go ahead.
That's absolutely right. I mean, the industry in the United States wasn't really regulated to any meaningful extent until about 2018, when the Supreme Court decision allowed states to start regulating, and that's brought the business out of the shadows. It's not like people weren't betting online prior to 2018. It was just entirely offshore. So, in order to have proper safeguards for people and identify problem gambling early, it's critical that the activity actually be regulated and onshore. Otherwise, you've got no visibility into it, and you can't help these people. Which, of course, problem gambling is it's a problem for the industry. It's everybody's problem, and nobody wants to see these people struggle. So it's a critical focus area for the whole industry.
That's right, Scarlet. I was caught up in the Cayman Islands era, man, way back. Before it was regulated. Thank God it's regulated now, Scarlet.
Charles, you've come on Bloomberg Radio in the past to tell us how the online gambling industry is pretty resilient to the swings of the economy, the ups and downs. For example, in the UK, gambling growing at more than 8% a year when GDP is forecast to be sub 1% for a second year. Talk about the growth of online gambling in the U.S., especially sports betting, and the seasonal pattern of that growth. I'm wondering how much of a correlation there is with calendar events like the Super Bowl in February or March Madness or the NBA Finals in June or the World Series in October.
The growth of the industry in the U.S. absolutely is driven in part by the sporting calendar. The Super Bowl, of course, the biggest individual betting event of the year. March Madness in aggregate would have a lot more handle than the Super Bowl, and that's obviously because it's many more events. It's not just one event. Mm-hmm. Another big driver in the U.S. is every time there's a new state which goes live. So at this point, Missouri...
But that's a one-time thing.
Well, it's a one-time thing, but then it kind of permanently expands the TAM, right? There's a kind of rush of activity when the new state goes live. All that pent-up demand, people that have been waiting to register accounts go out and set up their accounts. And then it quiets down a bit, but then you're going to have, 15, 20, 30 years of fairly reliable growth. You just look at the UK, as you pointed out, they regulated online gambling in 2005, and it's still growing by nearly double-digit rates.
Is that right?
And you know, with our business, we're making more money in the UK than we have ever made before, despite the fact that this business has been around for some time. Just so to clarify for all the listeners out there, gambling.com, it's not actually an online gambling site, despite the name. It's a website to help people find the best places to play online. So whether it's sports betting or online casino, there's a lot of different options out there, especially in the U.S. You know, every single state is different.
Charles, you're the group CEO of Gambling.com Group. You started the company in 2006. You're an American. You went to UNC Chapel Hill. But you're living in Europe. You're actually living in Monte Carlo, one of my most favorite places. They know me over there by name. And I really just wanted to ask you, you know, now that gambling has really arrived here in the United States, I mean, you're really well positioned, having lived there for a very long time, to see how it affected Europe before the U.S., right? Because gambling was legal there before us. So talk to us a little bit about what comes next for the United States of America for sports gambling here in the U.S. If you had to look out over the next, say, 2, 3, 5 years, you know, do you expect every state to legalize sports gambling? I mean, is it unique to the U.S. that, you know, it's taking us this long to get there? I'm just curious to hear your thoughts.
Yeah, great questions, and very happy to talk about that. We have a bit of a unique perspective in this because I grew up in the States. I grew up in North Carolina. I went to UNC. When I was graduating from UNC, I wanted to start a business in the online gambling industry, but the industry didn't exist in the United States. It wasn't.
You're ahead of your time.
Yeah, you just couldn't do it here. So I left, and we ended up building one of the biggest businesses in the industry in Europe, and you know, on the back of the power of the UK and you know, other European markets, Ireland, Sweden, Italy, Germany. I mean, it's, you know, there's a lot of regulation. You know, the industry was regulated first in Europe. You know, the UK has been the biggest regulated online gambling market. You know, basically, until now, it still is bigger than any individual U.S. state.
Right.
But now the U.S. in aggregate, if you count, you know, all the states, it's bigger than the U.K. So that has really set the tone and for the whole industry, right? You know, a lot of the technology companies, marketing companies, data services companies, they're all European, actually.
Right.
Biggest online gambling company in the world is Flutter, based in Dublin. But of course, you've got DraftKings, you know, and Flutter now owns FanDuel, and you've had this coming of age in America of this industry finally, but because it was so late to the party, it's been this just absolute mad rush for everyone in the U.S. to kind of catch up. Well, you know, you talk endlessly about, you know, American technology hegemony and you know, Google, Apple, every Magnificent Seven, all this stuff, right? It's quite rare that you can find an example of Europe leading in in any area of technology, but they really are truly ahead of the United States still when it comes to everything related to the online gambling industry. And that's not a slight at, you know, some of the big American suppliers or operators, which are amazing businesses. But, you know, if you just look at the balance of the industry, it is still fundamentally not led by the United States. Now, 5 or 10 years from now, anything's possible. You know, I think the industry is going to continue to grow up in the U.S., you know, the center of gravity of the industry in terms of, you know, where is the heat, where is the investment, where is the growth? That's clearly been the United States since 2018. You've got 30 plus states now with sports betting. You've got a handful of states with these online casino games, and that still works. It works because they have both sports betting and the online casino games, which kind of prop each other up. It's a 1 + 1 = more than 2 sort of situation.
Charles, you've made a number of acquisitions in the past year. Last April, you bought XL Media sports betting and gaming assets in Europe and Canada. More recently, in December, you bought OddsJam, which has been described as the Bloomberg terminal for sports bettors, which I like that comparison a lot. What other capabilities are you looking to grow through purchases rather than organically?
So the heart and soul of our business is a affiliate marketing business for the online gambling industry. It's an incredible business. We drive a lot of our traffic from Google search, natural search. We buy a little bit of media, but it's fundamentally a business that drives its revenue from natural search, and that's a very high margin business. But you know, we're a publicly traded company, and as we think about our future as a publicly traded company, that revenue from the affiliate business, it can be a little bit volatile. You know, frankly, it's a phenomenal business and extremely cash generative. But as a listed company, you got to manage the earnings quarter to quarter, and we like these subscription revenue businesses. So when you think about OddsJam, you've got a highly predictable B2C subscription business, and they also have a B2B side of that business called Optic Odds. They sell that to, that's really the Bloomberg terminal, if you will. That's the more sophisticated product, which they actually sell to the online gambling operators themselves so that they can manage their risks.
Got it.
They want to make sure they're on the right side of every market. They're not, too far off of the market and everything. Both of those businesses, the revenue there is more predictable, right? It's longer term contracts. It's just we can forecast that with a higher degree of precision. So when you mix that into our overall revenue profile, it gives us, a greater kind of control quarter to quarter to see where we're going to land. And it just makes it works well in the public company context, but at the same time, their margins are actually even higher than our margins, are already very high margins. So we love that acquisition. It's gone over really well with all of our investors. It really ticked all the right boxes, and there's a bright future for that.
Now, to give you how much money is out there, we're talking last year about $150 billion in the industry, online gaming alone. Now, this year, yes, only Missouri is expected to approve it, but it's going to grow because we did a story recently, Texas Governor Greg Abbott, who was totally against it when it first came out, and recently said, maybe this isn't such a bad idea. So I see a lot of growth in this.
But the only thing we know for sure right now in terms of new state launches is that Missouri will launch. Right. That's already been voted on. That was a referendum in November. And in the terms of that referendum, they have to launch by December. So that's 100% coming and is incremental to our guidance because we don't put new state launches in our guidance until the date of launch is crystal clear. But all of the other states are still looking at it right now. So a lot of these state legislators, they meet in the first couple months of the year. So a lot of these folks are in session right now, including Texas. Texas is every other year, but they're in session now. They're looking at it. There's tons of bills, both on the sports betting and iGaming side, in process now that have been filed. It is certainly my view and that of the rest of the senior people in the industry that we'll get a few more things through this year. It's always hard to say exactly what, but I'd be shocked if we don't get 2 or 3 sports betting states and 2 or 3 iGaming states. But it can take 6, 9, 12 months for them to launch, right? So even if they get the legislation finished in the first half of the year, they may not launch until 2026. And of course, with these new, as we discussed, these new state launches being kind of big moments of business for us, we don't add it into our guidance until we know exactly when it's going to launch because we need to show which quarter that revenue is going to fall into.
Charles Gillespie. Oh my goodness gracious, we talking gambling. I just said, I was out before we came into the studio. I said, my goodness. Are you ready, Michael? I said, yeah, that's like the rat talking about the cheese, man, talking about gambling here. Charles Gillespie, thank you for coming on the Bloomberg Business of Sports. Gambling.com CEO right here in studio. Thank you, sir.
My pleasure.
A special thanks to Charles Gillespie for joining us. He is the founder and CEO at Gambling.com Group. And thanks to you for joining us. For my colleagues Damian, Sassower, Scarlet, and Vanessa Perdomo, I'm Michael Barr. Tune in again next week for the latest on the stories moving big old money in the world of sports. You're listening to the Bloomberg Business of Sports from Bloomberg Radio around the world.